Oh, because we were looking at Claudio's camera. I was getting a little confused.
No.
Okay, no problem.
Sure so we're gonna go ready. One more time, man. 3, 2, 1.
Once again, welcome back to our Financing Simplified podcast, brought to you by InTouch Mortgage Solutions. I'm your host, Anthony Venuto. Today, we're bringing back Claudio Venuto, not only my brother, but also a mortgage broker here at InTouch Mortgage Solutions. And I want to introduce to you the guy behind the scenes, Stefano here, who's got a compilation of some of our questions that we're getting for some of our viewers, either through Instagram, through social media, through emails. And he was going to do some rapid fire questions. Claudio, you ready?
I'm excited for this episode.
Yeah, I have no idea. We have no idea what is actually coming our
Yeah.
way. So it's like almost like Stump the Chump. They're giving like some of my age there.
We'll do the best to answer these questions to the best of our knowledge.
How do you qualify for a loan?
Okay. Qualifying for a loan, mortgage, obviously requires the most basic information is obviously your income, what you're earning, how you get your income, how qualified you are, what type of income. Is it been 2 years? Are you salary? Are you hourly? Obviously income, employment, length of employment, big important part of the transaction as well. Credit is a big player in the qualification of a loan. Do you have a lot of debts, liabilities, car payments, student loans? All these things are very, very important when qualifying for a mortgage here in Canada, Ontario. We have to fit our clients into a specific servicing ratio. That is the GDS, the gross debt servicing ratio, and the total debt servicing ratio. There are limitations depending on if it's an insurable deal, meaning either you're putting 20% or more down, or you're putting less than 20% down, which means you need to qualify on more stringent guidelines, 25-year amortizations for insured products, and purchase prices have to be sub 1 million. So there are a lot of criteria when it comes to qualifying. Obviously, you have to undergo the big elephant in the room is the stress test, the mortgage qualifying rate, the MQR, which is your contract rate plus 2%. So if that rate is 6%, you qualify at 8%. So this is how the process is achieved. And obviously, speaking with a mortgage professional can help you to position your file and provide you with the right advice on how to get qualified for that loan, that mortgage that you're looking for.
And Claudio, are we ready? Can
Fire.
you get a mortgage without a credit score?
So that's a kind of a double-ended question, because if you're a single borrower with no established credit or a rejected beacon, it's going to be very hard to qualify with an A bank. But there are definitely solutions to people with either derogatory credit, no credit. We would have to look at maybe adding a cosigner onto the deal, a family member, and it depends. But there are definitely ways to do it.
Do you agree?
I do agree. It is very challenging if someone has a like no credit score, meaning like they have no reported transactions.
Does that mean bad credit? Or does that
No.
mean no credit?
No credit is actually worse than bad credit.
Yeah, because at least with bad credit, you actually have bad
Yeah.
credit, right? With no credit, it's like we don't
lot
even
of-
know who you like. We
yeah.
don't even know what your repayment would look like, right? So
A lot.
But you don't know what the repayment would look like. But if it's bad credit, then you know, and then you got to say it can't happen.
Yeah, because the credit report is a resume for lenders, right? They'll look at it, they'll see what your repayment history is. Are you going to be good to pay back this mortgage? Are you going to be making your payments on time? Do you have established credit?
and even if you have bad credit, right?
Yeah.
With most conventional banks, I think the rule of thumb is if you're sub 600, obviously there's deviations in that, but if you're sub 600, you have to go to particular lenders, equity lenders, and they will charge a premium. The credit score is a tier. If you're between this score and this score, it's this rate. If you're between that score and that score, it's that rate. So obviously credit is important when it comes to pricing specific loans. I know there's a lot of people out there that say, credit doesn't really matter. It freaking does matter.
Yeah.
Of course it does, especially if you're on the bad or tail end of it, and especially the utilization.
So then, boys, here we go. This is for both of you. What's the difference between being pre-qualified and pre-approved?
There's a difference.
Yeah, there's a difference because, you'll see with like RBC, TD, they have these quick, online applications to get pre-qualified. And it's just pretty much, how much do you need to make in order to get approved for this value of mortgage, right? Where if you're actually being pre-qualified, you're speaking to a mortgage broker or even a
Pre-approved.
professional, pre-approved, to get a pre-approval, which is, we're sitting down with you and we're going through the whole process, right, from start to finish, from, how much you make, what type of debts that you have, and talk about down payment. It's a more lengthy process, and we at the end of it, you actually get most lenders now have a a certificate of being pre-qualified.
I think there's a lot to add to that. So, like, I mean, in a nutshell, when you think about a pre-qualifier, so on our app, you can download our great Canadian Mortgage app. It goes through the questions, right? But it's more input driven. So it's what you input to the system
Yeah.
is going to spit out the results. So, for example, if you're self-employed and you're like, well, I make this amount of money, but it's the wrong amount because that's your actual gross revenues versus your net income.
Exactly.
For example, or maybe you haven't been 2 years employed and your variances between year to year, and the bank will look at your T4 average. So input driven is just to give you a baseline understanding. Also, with a pre-qualifier, there's no documentation collection.
No.
As pre-approvals, at least here, what we like to do is make sure that we, especially with underwriters and working in the banking industry, is looking at your job letters, your T4s, making sure that all the verbiage is correct.
And now you'll actually see like little things like asterisks on pre-qualification websites and tools that they'll say this is not a pre-approval.
Yeah.
This is just more of a better understanding to give the client to say, where do you stand, right?
Yeah, and if you're giving a pre-qualifier to a realtor and they're accepting that at face value, well, I think you need to hire a different realtor because it's a completely different animal. Even
Yeah.
pre-approvals have their limitations.
Yeah.
It's very important for our viewers to understand. Even if your income is good, you have to verify the down payment. That's one thing that's very, very important this day and age, is making sure that those funds are in Canada, making sure, especially with the higher immigration levels, if you're new to Canada, if you're a permanent resident versus a Canadian citizen, what does that mean for,
Yeah.
a lot of times we'll catch clients, like we've done it, we're going through the pre-approval process and it's like, oh, your SIN starts with a 9 or a 1 and it's not starting with a different number. This is a whole different ballgame. Or something I talked about was, is the down payment coming from a country that's sanctioned? Big, important question. A lot of times people are like, I just have the money. It's coming. It doesn't matter where it's coming from. Yes, it does. Yes, it does. Especially if it hasn't arrived yet and so on and so forth.
And
That's why talking to
and it's like, we don't want to scare people and say like, oh, we're asking these questions, but it's best to get that information up front, because then we know exactly where to position it, who to take the deal to, because even if you have down payment coming from a sanctioned country, doesn't mean that you can't get the deal done.
Exactly.
As you just may have to go through the whole bells and whistles and get a lot more documentation, but at least we know what we're dealing with and we can get it done.
Absolutely.
Yeah.
All right, so here's the deal. When you said all this, the most commonly asked question in the entire world right now, based on, of course, where you live, is how much should you save for a down payment? And a lot of people are saying, we hear 10%, we hear 20, we even say, they also say if you put down 20, it's better because you don't have to pay a private mortgage insurance. So explain to everyone, what is that magic number on down payment?
There's no magic number for down payment. Obviously, it's why, especially in this day and age with higher inflation costs and living expenses being increased. But to some of the points of the question, if you're putting 20% or more down, you do not have to pay the default mortgage insurance premium through Canadian Mortgage and Housing Corporation, Sagan, or Canada Guarantee. So you're saving a little bit of money there. But obviously, it comes down to where you're looking to buy. If you're in, let's say, provinces outside of Vancouver, in Ontario, a lot of those transactions, speaking to other professionals in the mortgage industry, they're insured. They're buying with 5-10% down, because the house is $400,000, so you can put down 5%, 10% on an average income and maybe be qualified. So it all depends on where you're buying. But like we talked about earlier, if you're buying for over $1 million, you need 20%.
If not more.
Do you want to add that?
I was just gonna say, like, it's a lot more of like how much to save, because it all depends. Like you can save 100, 200,000, which is great, but your income can actually hinder you. So that means you might have to actually put more than that 20% down. So to say there's a set number down payment is very difficult.
Anna, jump on this one. How do you know which home mortgage option is right for you?
Well, That's a good question. With so many different mortgage products available, so many different lenders that are offering different components within their products, what mortgage is right for you? Generally, I guess as a rule of thumb, just having an open conversation. If you're a first-time home buyer, maybe you're buying insured, maybe you're looking at your options between a 3 to 5 year product. If you're taking a longer-term product, let's say like a 5-year product, my recommendation to our clients is not selecting a major bank. And some people might be saying, why is that? And well, I always tell clients that, look, if you're taking a 5-year mortgage because you're needed to qualify, we've had so many clients that we're talking to between a 6 handle and a 5 handle means a certain change in the purchase price. So if you're forced into a 5-year to qualify for the mortgage, you want to be with a lender like a broker-friendly bank that has more favorable penalty structures to get out of the mortgage. And it might not be the product that you want, but it might be the product that you are forced into selecting because you don't qualify for that. But generally, if you're a first-time home buyer, you want to look at these types of products. Let's say you're a more seasoned move-up buyer, you're purchasing your forever home. Well, then you have more options. You may want to work with a lender that can give you the flexibility to obtain a line of credit down the road, or have one of these products that has like a line of credit component built in. Because you're more stable, obviously this is something that you need to look at. So I think when it comes to selecting the right home product or right mortgage for the individual, it's best to speak to a broker because they have access to multiple lenders. And a lot of clients will come, I went to my bank. It's fine. It's great. A lot of people believe they have relationships with their bank, and so maybe they do. But it's imperative to get multiple conversations going so that you understand what's available to you. It's like I always say, it's like walking into a Honda dealership and asking them what they think about Toyota, right? Like if you're walking into someone who represents all types of cars, they're going to be able to give you the truth about all these types of products and give you that honest opinion. I don't know.
Claudio, what's a buy down?
Okay, that's so a buy down is, a broker can, if willing, use their commission to buy down the rate. So with certain lenders, we get paid by the lender depending on the mortgage amount, and if needed, we can all buy down the rate, so and sacrifice a bit of our commission to help the client out, right? This comes to when we need to be competitive with other lenders and other banks that, you might be 10, 15 basis points out, and you want to retain their business. That might be something to do. But sometimes we like to say to our clients, you know what, this is the rate, 10 basis points isn't going to get you much. I'd rather offer my client the cash back and be able to put that towards legal fees or something like that.
Claudio, when should I consider refinancing?
That's a great question. So, it depends if your mortgage is coming up for renewal, and, you have some debts that you accumulated, or you're looking to do a renovation to your home to add a little bit of value. That could be a great time to refinance. We see it all the time where people use it as a tool to debt consolidate, take some equity out to do a renovation, or they want to add a pool. That's a lot of things that we see. But sometimes it's a case by case basis, because sometimes if people don't need to refinance, then maybe you just don't need to. You just renew your mortgage.
And the biggest question is, where can they find you if they have more questions?
Well, you can definitely find us on our website. You can visit us at InTouchMortgageSolutions.com. You can email us at info@InTouchMortgageSolutions.com.
Yeah.
On social, you can find us on Instagram at InTouch Mortgages. You can find us on YouTube at InTouch Mortgages. And me personally, I'm at _Venuto on Instagram, staying up to date with all that content. And
Claudio's Instagram
is no Instagram, but you can definitely reach out to me by email or through the @InTouch Instagram page.
Right. You can reach out to us directly. But once again, thanks again for tuning in to our Financing Simplified podcast. We'll see you next time.